All right, before we jump in, you know the drill, but it's super important. This is all just for educational purposes. It is not financial advice. Okay, with that out of the way, let's get to it.
So, today we're diving into a really fascinating and honestly a kind of confusing story that's playing out. On one side, you've got these incredible record smashing growth numbers, but on the other, a pretty harsh market reality is hitting the daily yields. Our job here is to connect those dots and give you the full picture. So, let's get right into it. What we're witnessing is truly a tale of two different stories playing out at the same time, one of incredible structural strength and another of some serious cyclical weakness. You've got to understand both sides of this to see what's really happening. First up, the big, flashy headline. The fund's total value has officially blown past the $2.1 million mark for the very first time. It set a new all-time high at almost $2.14 million. That's a huge milestone. And it's not just the fund's dollar value. The number of bonds, which, represent investors' shares in the fund, has also just hit a brand new record, 47,165. But, and this is the big but today, here's that reality check. The daily profit, it's dropped to just under $4,900. I mean, that's a staggering 52% drop from that $10,000 high we hit just 4 days back. This right here is what the bear floor feels like. And here's why this is so wild. These records are being set while the entire crypto market is gripped by extreme fear. We're talking single digits on the Fear and Greed Index. It's basically a blizzard out there in the market. And yet, in the middle of that blizzard, people have minted over 7,600 new bonds since that February 6th crash. That's about $350,000 in fresh cash flowing in during peak pessimism. Now that is a powerful signal of conviction. So that brings us to the million-dollar question. If the fund is growing like crazy, why are the profits so squeezed? Let's break down the anatomy of this yield floor. And look, this is a math story, not a failure story. The answer, really, it starts and ends with trading volume. We've seen a steady slide from over $17 million just a few days ago, all the way down to $12 million today. And since the fund's profits come from trading fees, well, less volume directly means less profit. It really is that simple. This isn't happening in a vacuum. BNKR, which has been the main volume driver, has cooled off from its recent peak. The price of ETH is just kind of stuck in bear territory, other tokens are quiet, and the whole market is deleveraging, which is just a fancy way of saying traders are closing out their risky bets. It's the perfect storm for squeezing yields. This really helps put things in perspective. Right now, the annual run rate is sitting around 8%. That's the deep bear floor. But if we look back, we've seen it climb to 45, even 65% in normal markets, and go well over 100% in a bull run. And a quick but really important note here. If you're seeing a 125% APR on the dashboard, that is almost definitely a display glitch. The reality today is this bear market rate. Which, of course, brings us to the other side of this amazing story. If the yield engine is running at its lowest RPM ever, how on earth did the fund itself just smash a record high? Well, the answer comes down to three really powerful forces that are driving that structural growth, and they're allowing the fund to actually build right through these brutal bear market conditions. So, how's this even possible? Well, first, like we said, the relentless minting of new bonds just kept bringing in fresh capital. Second, even a small recovery in the price of ETH helps lift the value of everything held in the vaults. And third, the Treasury has been busy deploying idle cash, putting every last dollar to work. And when you put all that together, the result is stunning. Since that crash low on February 6th, the fund has grown by over 56%. That's more than $770,000 in value added during one of the most fearful weeks in recent crypto history. That is what resilience looks like. Okay, now let's zoom in a little bit on that volume picture. The market is clearly shifting. It's in a transition phase, and the story of BNKR is right at the heart of it. So while BNKR's volume has cooled off from its peak, it's still the king of the hill. It's accounting for over 61% of all trading activity today. It is still, by a very wide margin, the single biggest fee generator for the fund. But here's the silver lining. As BNKR's dominance comes back down to earth, we're starting to see these little green shoots of diversification. Other tokens, like AVNT and EDL, have had some nice surges in activity, and that is a really healthy sign for the long term, because it suggests trading volume is starting to spread out more. Okay, let's switch gears to the Treasury. What's happening behind the scenes with the capital is just as important as the numbers you see every day. We're looking at a Treasury in full-on action mode. This little side-by-side comparison shows you exactly what I'm talking about. Just a couple of days ago, the wallet was holding both ETH and almost $65,000 in USDC stablecoins. Today, that USDC is gone. It's been fully deployed into the vaults to earn fees. And get this, the ETH balance has actually gone up, thanks to all those new bond sales. So, after looking at all these clashing data points, record highs here, bear market lows there, how do we make sense of it all? Well, this brings us to the most important way to think about today: the engine versus the weather. Okay, so here it is. This is the single most important idea to take away from all this. You've got to separate the engine from the weather. The engine, that's the fund's structural health, is in record shape. Fund value all-time high. Bond count all-time high. Capital deployed, check. But the weather, the current market conditions, is just awful. Low yield, low volume, extreme fear. Both of these things are completely true at the exact same time.
And before our final thought, a quick but very important reminder. This is all for education. It is not financial advice. Crypto is high risk. Past performance doesn't mean anything for the future. And again, that 125% APR figure is likely just a temporary display glitch. Please always do your own research.
So we'll leave you with this thought. The fund is at an all-time high. Bonds are at an all-time high. And all of this was built while the fear and greed index was sitting at 5. The engine is the biggest it's ever been. It's just winter. And winter in crypto has never lasted forever.